Wake up, motherfucker.
All right, what's up? Okay, where are we at? August 27th, 2026, my time. It's already the 28th, your time. So, did anything happen today outside of software? Really disappointing. Honestly, very disappointing. The pre market was looking good, but the Korean market overnight really didn't push things further, right? By the time the market opened, all the semiconductor stuff disappeared. The only thing that stuck around going up was software because we had multiple beats on key software stocks like CrowdStrike. What was it? What was the big boy? What was the bigger boy? I forgot. Salesforce. Salesforce, bigger boy. And then there was a couple others. So that helped things out tremendously because the IGV was up like 5, 6, and towards the end of the day, but everything else fizzled out. Another thing happened though. Crypto was doing nothing all of the overnight market. Then once the market opened, pop, everything popped up like Solara or Solana. I mean, Solana popped up, and then you had some stocks that tracked crypto like MSTR go up with it. But it's not directly tied to Solana anyway. But Bitcoin didn't really move up that high. Ethereum either. Ripple did a little while for a little while. But yeah, it was mainly Solana. And for some reason, some of the crypto stocks, even like the Donald Trump Hut miners went up. But yeah, like the stuff I was talking about earlier. But overall, mixed bag. Not really sure what's up. QQQ went up about 1%, right? Maybe a little bit over by the close, but nothing banging like banging the drum saying like we're clear. It looks like we still have to wait for tomorrow morning. So remember, guys, tomorrow morning at 10 a.m., Kevin Warsh opens his fat mouth again. And I guess that matters. And then we had like Marvell at the close earnings, and it wasn't good enough. It was good, but not good enough, right? That's what people were worried about with Nvidia. It's like they know it's going to be good, but is it good enough for the price to hold or go higher? Not good enough for Marvell, but that's okay. Marvell is not a big component of the Nasdaq like Nvidia is, right? So we're still okay, but we need the semiconductors to get moving. If the semiconductors can't move up, you're not going to see the Nasdaq, the QQQ go up 3, 4, 5% again over the next week. Okay, moving the QQQ up that much requires everybody to work together. Software by itself can't do it because, as you know, software is a very small portion of the Nasdaq right now. Very small component because the semiconductors going up all throughout last year into the biggest, if not the biggest, technology component of everything, the S&P 500 and the Nasdaq. So it's not going to be easy. You can't just be like, well, semiconductors can go sideways and we'll still be fine. Nope, we won't be fine. If we keep drifting like this over the next week, I'm going to get more bearish. All right. I'm going to be like, well, maybe forget about SanDisk, AXTI, all those things, and even the other technology stocks too. Like, eventually, software is going to run out, right? We don't have many earnings left for software, if any. I think there's only Adobe, Oracle, which is probably bad. I'm getting worried about Oracle, but Oracle's way late. So yesterday, it's like I'm looking at it. They don't have an official date, but some of the estimated dates are either the 8th, the 11th, the 15th, but that's still far out. So what do we do in the meantime? Gold is done. Silver is done. I don't think we can go high with that. Crypto is about to tap out. I'm seeing the overnight movements on crypto. That's what we're going to discuss today. Is it tapping out now? Because, man, crypto should have been moving alongside gold and silver way earlier, but it didn't. It got delayed, and now it's like we're towards the end of the cycle here. It's like, come on, buddy. If you don't move up anymore into next week, you're done with crypto too. I'm thinking that's it. That's the move we got, and we're going to go back down, and we'll have to see how it does in October, November. So Yeah, there's not many trading days left, right? Until September 11th. That's all I'm seeing. Oh, okay. All right. Circle BMNR. Yeah, MSTR definitely caught up with BMNR. Man, fuck. It's just like, dude, how much do we have to go? We're getting closer to the end, I think. So that's it. And IGV definitely also software cycle also. So those two cycles, the software and the crypto cycles, are about to end pretty soon. So they're gonna top out. A lot of these stocks also have hit resistance. So I'm gonna cover them, and then oh yeah, the thumbnail. I put that up because I want you guys to go over to Plan C. Plan C. So if you want to, if you guys want to go over to Plan C, that's where we want to be. I wanted to review how we've gone so far, but first let me play this video a little bit. So Plan C. Let's go. Let's see. Okay. Oh man, Plan C. Plan C. Here we are. I just love playing.
Fucking bitch. Are you fucking kidding me? She just said, I'll leave your stuff at the front desk. I gave your full name to the fucking receptionist at the hotel because you can't respect my personal space.
Hey Grace, you're a fucking loser and everybody's seeing it.
What a fucking dude, what the fuck is wrong with you? Fucking cunt. Are you kidding me? The hotel's gonna be $150. You fucking bitch. No, it's fine.
Fuck her. You know what? Fuck you, Grace. I'm glad everybody's seeing it. If any of you donate to the Thorpes, you're a loser. Any of you give $1 to these motherfuckers, you're a loser.
Alright, we'll figure something out.
You don't make content, your pussy stinks, you smell, you're dysgenic. Your father's a broke, homeless loser. Get the fuck out of here, Grace. Everybody's seeing what you are right now. I hope you see it, bitch. I'm gonna call Pearl Davis. I'm gonna tell her to delete your fucking clips, Grace. I'm gonna tell her the type of person that you're dealing with, her incestuous relationship, how she came up, Grace. I got the goods on you, sweetheart. You try me, baby.
Whatever, who fucking cares?
You know the irony is Lalo was asking people to donate to burn the book that Ruby gave him in Vegas last year. Man, all this shit happened last year too. Fuck. They always keep going to Vegas and shit always starts. But so Ruby gave him the book, the Nietzsche book, The Gay Science. The Gay Science. And Nietzsche had a lot of things to say about Buddhism. I'm not really sure if he really understood Buddhism. I think a lot of Western thinkers back then didn't really understand. I mean, he harps on Christianity, and he said well, Buddhism is a little bit better than Christianity because at least it doesn't try to say there's a God, okay, that they have to pray to, and it's not about sin. So Buddhism is about suffering, and then blah blah blah. But yeah, he talks about life affirmation, right? And if you listen to Hormaxer, he complains about Christianity, Judaism, and all the other stuff same way. It's it's not life affirming. Religion is not life affirming. So yeah, okay, yeah. So Lalo burning that book would be anti-Hormaxer. I think he should burn that book.
I'm my own man. I'll figure it out. Fuck this. Whatever.
Let me type it in. Let me just.
Are you guys live streaming?
Yeah, of course.
Yeah. You can stream anytime you want, baby.
Nice. Suck our money.
Good looking
Send me
babies
some
can
money.
stream
Yeah, of course.
anytime. You want to go to IHOP with us?
Yeah.
I'll eat your pancakes. You never had a man make love to you and eat pancakes, have you, Mackenzie?
I just think about the balls. This is what Winnie looks like. I know what you're getting at, but it's so fucking true. I'm on their fucking channel. We said whatever the fucking want to say. Nick. Oh, Ben's right there. Ben's right there. Ben's right there. He's literally right there. Ben. Oh shit.
Sorry, we had a misunderstanding.
Well, obviously. I mean, I don't know what you have to make it.
I think you got caught up with something.
I texted you. It's not about you.
We're gonna need our stuff back, right? We can't talk about throwing people's property in the.
I was kidding.
No. No, and you can't start using anti-TLS stuff, right?
Alright.
Lalo, we went through this yesterday with you.
Remove the stream key after this is done.
Lalo, we went through this yesterday with you. Okay. You saw it all fucking day. And we told you to cut the shit. And now today, we're nice again about it, but it's getting a little old. You understand me? No. Fuck you for threatening to take our stuff and throw it in the pool. Fucking piece of shit.
All right. Hopefully we're gonna get a new guy doing edited content because Lalo is gonna go to Vegas again. He's gonna meet up with this Kick streamer, Flexi Faye. If you don't know, we're gonna see some action here. Hormax is pissed. He got cucked by Lalo with this Flexi Faye bitch. Yes. Drama. Is Hormax's arm broken? No, it's not broken. I don't think it's broken. It just looks like his muscles are like so fucking like it's like that watery muscle. I mean, I don't know how to describe it, right? He looks like a toy figure. I don't know if like that's the result of like the TRT that he does or HRT. What the fuck is it? TRT? Yeah. So I'm not sure. I mean, I'm not a gym guy, so but it's not hard for me to get muscles. It was never. I'm not naturally scrawny, so I could bulk up and see if like how far I could get. Cause what I'm pretty close to his age. I don't know how you would get. Okay, yeah, I don't know. Late 40s. Okay, he's early 50s. How buff can you actually get naturally, right? How can you do it natty? Is it even possible? Like, I don't even fucking know, dude. I don't think it is, huh? There's just no way. I mean, you gotta have some crazy genetics. Like, I gotta have like that. I gotta have that Slavic genetics, probably. I think if like those Slavic bodybuilders or some fucker like some stupid crazy ass. Yeah, I don't know. You gotta have some kind of crazy genetics to make that even possible without cheating. I thought maybe he lifted on roofs and broke his arm. He did break his arms. Actually, Tropes, yeah, he did. One time he was on one of those machines. He fucked up and he bent his arm. Yeah, he bent it all the way. It broke. It snapped off. That's crazy. I don't want to see that. I couldn't even imagine how that would look. Oh my god. Like just seeing someone arm bend unnaturally like that. Fuck that. Dude, I don't like seeing that shit on a football field. I don't want to see that shit in the gym. Like hell nah. You just like that's another reason I don't like using machines on a gym. Like I rather just do free weights, man. Or just use your own body weight. I just don't. Yeah, I don't know. That shit scares me. Fuck that. Flexi Faye has a tremendous rack. Yeah, she has pretty nice ass too. Not bad. Yeah, definitely. Yeah, but her face, like people say, is like it's busted. It's not really a good face, sadly. Whatever. Nobody's perfect, right? Nobody's perfect. What can you do? Okay, let's get to this. Plan C, check him out. We're gonna do hopefully more content. He's gonna try to make everything nice and neat so people don't have to suffer through thousands of hours of multiple. Now we got multiple streams you have to cover. So Dead Man today, I had to give him every little stream back and forth, time stamped, everything for him to cover, and he didn't even get through all of it. It was such a slog. All right. So if you remember back in March here, we had our low. And again, we had another low, late July. So late March, late July. And one of the ways you would have caught the bottom, because like the S&P 500 is mainly driven by semiconductors right now, so it has a big influence. One way to look at things is to look at the semiconductor. Let me see. I'll zoom in a little bit here, make it a little better. The semiconductor breadth. Okay, I'm gonna look at the breadth. Breadth, not breath like in bad breath. I mean breath as in the with the D, okay? With the D, breath, breath. Even though like I pronounce the word the same way. Okay, so that's a homophone, I guess, in American. I'm not sure if that's a homophone in other accents, but here we go. You see this one, right? The breath here, judging by the how many stocks in the SMH ETF is greater than the price is greater than, I think this is the EMA. It shouldn't matter. If you did the SMA, it would be the same thing. But because stock charts, they only give you this option here, I have to use the 50 EMA if it's greater than, and I can't use other like different ones, right? 40, 18, whatever, anything I make up, no. Now, because we have AI, I'm pretty sure I could just go to AI and make my own indicator like this, right? I can go to Claude or ChatGPT or whatever, Grok, and I say make me some code that can give me this breadth indicator for IGV, right? The IGV ETF, the software ETF for the whatever ETF. Because right now I'm just restricted to whatever stock charts gives me. But for now, this is okay because this is where this is an important ETF anyhow. So semiconductors, if the breadth is low, that means a lot of stocks are bad. They have a price that's lower than the 50 EMA, exponential moving average, so less than some 50 moving average. Then you would say like, wow, a lot of stocks are looking weak. So that means we might be at a bottom. That's how it goes. That's what people would look at. So this is very extreme. I put the red line around 25% because I say, it's not often that we get this low on SMH. So last time we got that was November 2025, right? And then again, we hit it again around early March, but that was a false signal because it's the S&P 500 kept drifting lower. And all right, we got a lower low right at March 30th. So once you saw these little things, you would be like, oh, a bottom is about to come. A bottom is about to come. It's not perfect, as you can see. If you bought over here, you would have been too early. You bought here, you would have been right. Again, we started having this issue over here, right? If you bought over here, you would have been too early. You bought it when it got down lower, you would have been right. So it's not perfect. Not perfect by any means. But this is one way people would use one item, one signal that people would use to try to find a bottom. Again, we hit it here. August, let's see, what was it? August 24th. Okay, August 24th, right? So that was this Monday. You see that? And that was the time when we had the Monday after the options expiration. So that's why I was saying, I'm guessing because of options expiration, the Monday after it will go down. And if I check this indicator, the semiconductors are at a low again. I'm not going to wait for it to go lower, okay, like this, because this drop was very, very shallow. when you have a steeper drop, I don't think you want to catch the first one. Usually, right? This one is shallower than this. This one was weird. Okay, even though it was shallow, a lot of semiconductor stocks were getting murdered because of the Korean market, right? You have to remember the Korean market over here was terrible. If you look at the Korean ETF, it looks horrific, and if you look at the semiconductors, it looked horrific, even though the S&P 500 went sideways. So this was kind of a weird situation where we know that the semiconductors made a greater portion of the S&P, but for some reason the index level was being pinned here. Remember that word pin, right? So something was happening in the options market that kept the index flatter than usual. It was not following everyone else because of the correlation. Remember we were talking about that, the correlation, dispersion, blah blah blah. So it had something to do with options. It was weird. That's why now you could see like why I keep bringing up the option stuff, because if you just look at these charts, it doesn't make sense. You know, it doesn't have a correlation. This thing isn't correlated heavily with this when we got to this point here after June, July. It's weird, right? It got weird, and now it's getting weirder. It's getting even weirder. Like we see semiconductors still weak, still not recovering, and software is trying to take over. Crypto's going up, then gold's coming back, and you're like, what the fuck? Where are we supposed to go now? So that's the question we have to answer from here on out, because it's going to get even tougher to sort out as we get to October and November. Okay, but anyhow, you get the story. All you got to do is look for these little drops here, and then you could say, oh, that's the bottom. Now, the better way to do it would be if you combine that with the cycles, combine that with some other technical analysis. That'll be better. You can't just use one signal, right? So let me see. Let me get this. We're going to talk about crypto later, but let me first use do the SOX, do the cycles for the SOX. So if I got that, I got this here, right? Okay, let's line it up with the cycles. So this one, the 85, 80, 85, 90 day cycle, very good. It's been following this very nicely. As you can see, like the bottom in late March, early April, then again, bottom again in late July, okay, early August. Now, the problem is that we're supposed to keep going here. We're supposed to keep going here into October. Semiconductors should keep trying to go up. Like it has the right of way. It has the prevailing winds on its back, but it doesn't need to. We could just crap out right here and not do anything. We could just stop right here. Now, if I look at something like the IGV or XSW, I use the XSW because this one's equal weight. The IGV is kind of weighted with a few, with too many of stocks that dominate, like Oracle or Microsoft. I want to do broad based all the software. So if you look at this one, you could see like the equal weight, we made a new high. If you look at IGV, I don't think we made a new high, huh? But for the equal weight, we made a new high. And if you look all the way back to 2024, we've been going sideways, up, down, up, down, up. So for 2 years, we've been doing this crazy yo-yo dance. That's why I never liked software past 2024. After that, it was just all semiconductors all the way, starting from 2025. And you could remember this was the time when Palantir had a hard time making a new high, right? It was like struggling to get to 200. And after it got to 200, it got rejected right away. So, yeah. And we got 2 cycles here, 130, 214. Okay, I'm using this one. Okay, 130, and we got 214. See, 2 cycles. So we should be done. Like this should be it. We should be close to over on this one, as you can see. So with the 214 one, it looks like we are about to lose any kind of help from here. It should be harder and harder to go up. It doesn't mean it will stop going up. It will just mean like it's just going to get harder and harder as we get towards the end of the year. So the easy money was already made in a lot of these software, like most, like, okay, which ones haven't done well? Adobe, Intuit. Only like the cybersecurity had a clean move up. Oracle lost everything. It went up and it went back down. Oh man, Palantir recovered, but it right. So Palantir is so not every software stock had this kind of recovery right now. So unless you were just only in the winners, it doesn't look like this. So that's why the equal weight, you can see, like, if I just equally weighted every software company together, losers and winners don't try to dominate the picture, then I treat everybody equally. This is what it looks like on average. So the average of all the software little companies that we have. So overall, the cycle looks like this. All right. Even though, like, if we look at the semiconductors, we still have an upward trajectory into October. For software, it looks like we're done. Okay, so similar to software, look at crypto. How does crypto look right now? Okay, let's see. We got 58-day cycle here on Ripple. All right, it seems like this cycle is very important for Ripple. This 58-day, we're about to be close to the end of this. So sometime in early September, it should be done. Should be over. Yeah. So as we get closer and closer to Labor Day, I don't think there's much juice left on here. I gave it a shot, right? I gave Ripple a shot. Look at the Solana right here. That's what I'm looking at right now. Let's see what this cycle is. Solana, this 59 days. So 59 day. This one has till maybe September 11th. So 9/11. Maybe that'll be the end of this move here. So this one's good. It's following its trajectory pretty well. Let's see what this long-term cycle. We have a longer-term cycle here. This is why, like, I'm not enthusiastic about crypto right now. I think it would be better to buy it later in the year as we get closer. So you see this? So you had all that time to try to go up from March to July, but everybody was chasing semiconductors instead, right? All that money was going to semiconductors and AI, not crypto. So crypto wasted too much time. It took Scott Bessent to pump the bond market temporarily too. It's not even like a permanent pump. It was just that, like, they said, "Oh man, the Treasury Department wants to print money now too." What? Well, I mean, it's not directly printing money, but essentially the same. It's like the Treasury Department wants to, which no sense. They can't do QE, but it kind of looks like they're doing QE in a way, right? So then it's like, oh man. So all that news drove this thing up right here. That's not going to help. I mean, that's fine with the shorter term cycle, it's following this fine, but there's a larger cycle that says, this isn't going to be permanent. So I believe this will last. This thing will just drift back lower again, and so expect it to go down again, and that's when you would buy closer to the end of the year. So anything with crypto, I've been telling people, it's just the end of the year is will be the real low. Anything you get now, it's just a trade. It's just a trade. And sadly, this thing should have done it earlier. Like you can see with MSTR, if this thing followed gold and started going up like 3 weeks ago, this thing could have been a lot higher. So I'm very disappointed with this one. So yeah, I got a little bit of MSTR, gold, silver, all at the same stuff, but the crypto stuff did not move quickly enough to beat this cycle here. And we could see there's a bigger nearly 200 day one. Yeah. This one, I'm not sure, right? It looks like we could maybe this is an okay bottom for some Bitcoin. If you're just looking at Bitcoin, maybe this is it, but I'm not 100% sure. All right, this thing might not be okay. I mean, I don't really want to use this as a way to BMNR. It's like, MSTR is kind of a proxy, but I don't know. It's weird. MSTR is kind of weird. Follows its own thing. So let's see what the BMNR stock itself is like weird. I don't think I can use this to do the cycles on it. Like this might not be the right way, right? You can see this one. This one is like it's saying like the bottom should be here in December. Yeah, this makes sense. This definitely makes sense. Okay, there's a bigger cycle here. I don't know. I don't think I should trust using this to infer a cycle. I think this stock is too jacked up to do this. No, this can't be right. So no, I think yeah, you're gonna have to wait a while. That's what I'm thinking. Anyhow, if we look at the DeMark stuff, Solana. I keep calling it Solara because of Toyota Solara. Yeah, Solana. We got the 13 right here. C5, perfect. We hit it. So it hit its target right now, and it's pulling back as expected. So what I saw last night, I said, oh, that's probably the end. So first it was Bitcoin, Ethereum, or Ethereum first. Actually, Ethereum was working better than Bitcoin. So Ethereum was creeping up, then Bitcoin. Then you got Ripple. Now you got Solana. I don't think there's anybody left because those are the big boys. I think those are the big boy cryptos. I'm not going to look at Litecoin. I'm not going to look at Ethereum Classic. Is anything else even important in crypto land? I don't know. I thought like Ripple, Solana, Bitcoin, and Ethereum were the top 4. Everybody else was just forget about it. Who cares? So this one already hit its thing. I'm gonna do the Ripple now. Let's do the Ripple. See. So yesterday I said like it could be a bottom that you could probably buy and go to the top. It hit its 9. It started counting up. It started going 1, 2, 3, 4, 5, 6, 7, and then it gave up and started going back down. And it's like, oh god damn. Well, that's it. Maybe that's over. I guess it's not going to reach its target, you know? All right, that's not encouraging. This is not encouraging. You see the volume on Saturday was very high, making this doji right here. And it's been having trouble just getting back to the top portion of this bar. So if it's doing this, then I'm guessing we're not going to get the 2 next week. I'm guessing maybe not. Maybe this is it. Maybe this is it. Let me see. Okay, tonight we'll have options expiration, futures expiration for crypto. That's also true. So maybe after the options expire in a few hours for all these little cryptos, for futures and options together, maybe by the morning we'll know. Last time this happened, everything crashed. Last time we got to the options expiration for crypto, because crypto options expire on the 4th week. So usually the last week, the last Friday of the month, not the 3rd Friday, like everything else. So for some reason it's like that. And last time everything crashed after that. So who knows? Maybe in a few hours you'll just see this thing crash, go all the way back down. Especially if Kevin Warsh says something nasty, right? If Kevin Warsh says something really nasty, then goodbye crypto. Bye-bye. Who cares? Come back in December. I'll see you in December, guys. That's when we're gonna get back in. Okay, Bitcoin not really moving towards this resistance here because we got the 2 13s right now, sequential 13 and combo 13, and they draw 2 lines. That's where you have to cross to get above it to confirm that we're going to break out again. This doesn't look encouraging. If by the morning we start going back here and breaking down below this dashed line, then yeah, probably not going to make it. Okay, that's all I want to say. Oh, okay, now we're gonna have to get into VIX and all this stuff again. Oh man, giant data titties at the bottom, on the bottom. XRP gonna make me rich in 20 years? 20 years? I don't know. You have to wait 20 years to get that? I think you could get rich now. So tired of Korea. Yeah, Korea owns anything. Korea owns anything, man. Hormaxer was always talking shit, obviously. Oh, you're talking about like that stuff? Damn. Yeah, they only get the one bed. They get the nice one bed and sleep together. Yeah. Oh shit. Yeah, there was a lot of stuff that you missed, tropes. I don't know. You gotta forget about it. It's not worth talking about that shit. Come on. It's like, come on. Okay, the VIX term structure. So the reason I bring this up is because I'm gonna play the video from the options guys, the nerds. They're gonna talk about VIX term structure. So this is a VIX term structure. So for the futures, you have a contract every month. Front month going to September, right? October, November, December. So 3 months out is December, and you get this ratio here. So you get the 3-month number. So 19.47 divided by 16.7. That's what this is. VXV divided by VIX on stock charts. I think it's called a different name on TradingView. So it's not VXV, it's like VIX or VX3M, something like that. Anyway, you could just do that ratio. You take that divided by VIX and you get this number. And what happens is when you get above about 1.2, you get nervous because that kind of tells you the top. So the last time we had a big extreme value was 1.319 up here in December 23rd, 2025, right? Somewhere around here. 23rd, 24th, just before Christmas. Now, we didn't start moving down until the war, right? Yeah. So it was going sideways. Even though it was like, yeah, that's pretty close to the top, but it didn't tell you when it would start dropping. Maybe you would say like, oh, well, it went below 1.2 over here. Maybe that's when it starts dropping. Yeah, kinda, not really. When we got like down here, when it started touching 1, okay, you would have got more nervous for sure. So this doesn't mean like the top is in, right? We could still go up or sideways right now. We'll still like keep melting lower, and only until something goes wrong closer to 1 on this little chart here, then we start worrying. Maybe that's what you would say. I don't know. If you look back here, the tariff, okay, we had the top over here, December 6th, 2024. We went sideways. We made a little minor high in January, late January. But the market didn't really get serious about Trump's tariffs until mid to late February, right? When he started talking more and more about it and saying like, oh, I'm going to give everybody 10% tariffs. Oh, wait a minute, I'm going to give everyone 30% tariffs. I don't know. He was going crazy towards March for sure. And by the time we got to April, it was like the most extreme levels, right? Everybody got really nervous about what he was going to really give to different countries. And at that point, let's say if it got towards 1 around late February, yeah, that would have been a good place to sell it. Now you got this false signal over here though, September 17th. So I don't know. You can't really use this signal to say when to sell either. It's not perfect. This signal by itself is not perfect. So once again, I give you another thing to try to figure out a top or bottom of, but it's not perfect. So perhaps you got to combine it with the cycles. Perhaps you got to use the demarks. Perhaps you got to do something else. This is what the problem is right now I have. And now we got these stupid options to worry about. So which signals do we incorporate, shove it into the AI and give me an answer? Because that's what we need to do. None of these signals I've seen have been perfect. I've learned this over the years, and none of them I've seen work well alone or like just with 1 or 2. I think you need multiple things together combined to give you a clear answer. And it keeps changing. The target keeps moving with the options. So I'm going to play the options now. Let's see what you think. You think Lunar's still going to rally? I mean, the charts right now aren't broken, but it's going to depend on tomorrow morning, most likely. It really will. Because after tomorrow morning, there's nothing left except Oracle earnings. Oracle, maybe Broadcom might matter more now because if Marvell went down, and tomorrow it keeps going down, then Broadcom is going to be important. It's going to be a lot more important than before. Usually Broadcom and Marvell would report earnings close together, but this time they didn't. So maybe next week we'll have to be afraid again. That sucks. Every time we don't get a clear answer from these earnings results, people just scratch their heads. It's never good. It's never good.
So the market seems consistent lately, but our data suggests that this might be the calm before the storm. Here's why. So today we have NVIDIA after the close, and through the weekend we have Jackson Hole. And people are suggesting that nobody really cares about these events. And where do these opinions come from? Well, partially the pricing. If you look at this chart here, this is the implied vol term structure, the forward curve.
Okay, so you see those little red triangles there? It's like the options market says NVIDIA earnings plus 0.32. So they expect a big move in the markets because of NVIDIA earnings. As we can see, it was pretty boring. Now, going towards Jackson Hole, it goes down 0.23. All right. So, I guess that's what this is telling me. Anyhow, his face is covering like the little legend here. But overall, the NVIDIA earnings was the big thing people wanted to happen. That's what everybody was worried about. Now it's over. So what's left? Jackson Hole. Inflation number 1, ISM. That's what that is. Another inflation's number, ISM services. And then we have non-farm payroll, so unemployment going up here. And then we have long weekend risk. Oh, what's that? That's the Labor Day weekend. So that's it. After that, it goes back down again. So from here to Labor Day is not clear, right? We went through the most scary moment of the markets, which was NVIDIA earnings, and we passed that already.
What this shows is the actual forward vol associated with all the different events. And so NVIDIA stands out as the largest one. Right behind it, Jackson Hole almost looks like it takes a back seat. And as you walk through the rest of the 30 days forward, there's virtually nothing of real interest. Everything here implies less than a 1% move as far as market expectations. And where might this come from? Logical, actually, when you look at the positions themselves. Because what we're finding is that the market is pretty well supplied with gamma. So if you look at this chart here, this shows the market maker's gamma for the entire position over time. So as you can see, the position was considerably strained through the first quarter of this year, and then it came back to long gamma where it sat for most of the second half until recently. It's gone a little bit off the rails, but right now it does sit in positive territory, more volatile. But the key thing to take away here is that market makers are not short gamma, not at all. In fact, what we're seeing with our data is that market makers are being supplied gamma, but they are having to sell Vega because customers are not hedging these near-term events. In fact, they're actually choosing to go farther out on the term structure and hedge behind the mid next year.
They're buying puts further out. Okay, so they expect crazy stuff to happen after the elections. You would think they would be worried going into the elections, but no, they don't really give a shit. They're like, whatever, probably calm. Or I don't know what they're thinking. Maybe it's not really true. It's just the way the whole options market right now is set up, because we've gone so high thanks to semiconductors or whatever the reason could be. But they seem to be more worried about stuff that happens after the election going into next year.
And where are they hedging? Here are the actual positions. Every red bar you see on the screen here represents an equivalent straddle quantity held by customers as a long. So these are market maker shorts. When a customer buys an option, they show up as red bars, short options for the market maker. This is what we're capturing here. This bar here reflects that market makers are short the equivalent of nearly 15,000 December straddles. This is much more than usual. They're short in December 31st. They're short in January, notably a month where they're usually long options. So something is different about this period. There is a lot of hedging. It's just not where you're used to seeing it. This position will become a problem because if you look here, these blue clusters in the front of the term structure, This is mostly cyclical overwriting. A lot of these small bars are sold every other day. That's all there is. There's nobody right now, or apparently nobody, really selling vol to the market. And that's going to be a problem as all this near data stuff continues to roll off in the near future. Now, as an index market maker, I was mostly focused on the near data part of the curve, but my colleague, my partner in VS3D and vol signals, Matt Nadell, spent his career at banks managing these portfolios and handling customer flow as well. So Matt, you want to tell us a little bit more about what these positions mean and what the implication might be for the market going forward?
Yeah, I mean, what this means essentially is that market makers are short a large amount of Vega, and what they're doing to basically hedge that is not buy the Vega back, but what they're doing is they're actually getting supplied shorter dated options, as you can see in the front month. Most of these shorter dated options come from systematic flows where customers are selling high gamma options. So what this does is it actually creates a very steep term structure where the short dated vol is depressed relative to the 3 to 6 month vol. You get a term structure where the implied vols are low in the front, but then they quickly rise out to December. And this is because market makers are getting supplied the shorter dated vol, but they're getting lifted in the longer dated vol, in the 3 to 6 month vol, creating a very steep term structure. The term structure is also steep because, as you can see in this chart, the realized vol of the S&P has fallen off a cliff. The realized vol is how much the S&P has actually realized. In this case, I'm looking at 10-day rolling periods. And you can see here that it has dropped precipitously in the last week or two, all the way down to where the latest 10-day vol is around 5. So the combination of the realized vol in the S&P dropping like a stone and market makers getting supplied with shorter dated options causes the implied vol of the shorter term options to be very low relative to the 3 to 6 month vol, where market makers have been consistently getting lifted, creating a situation where market makers are basically patching their short Vega with gamma. Now, if realized vol picks up, or we ever break out of this range where market makers have all this gamma, it could get a little messy, because if you go away from your shorter dated options, all you're left with is the short, longer dated options, which could create a vol increase.
So what Matt's describing is a position that has long options in the front versus short options in the back, when most of the time the market makers are long options in the front and flat to long options across the rest of the surface too. And so what you get when you have this position instead is this constant undulation. It's not normal to have gamma this volatile. So if this is reflecting or a reflection of liquidity and therefore market stability, what you can see here is all of a sudden there's this new volatility. There is a volatility of volatility. The market is not stable. At any given moment, if someone comes and buys a bunch of cheap near-dated options for a hedge, that could flip the market quickly into a very unstable position in general. And as Matt pointed out, because all of the long gammas in ranges that are near spot, all it takes is a shallow decline to suddenly find yourself in a very different overall, where suddenly you don't have gamma, you don't have Vega, you have a lot of positive van. If vol goes up, creates a lot of selling, like we saw in the beginning of the year. So this.
All right. So what I got from that is that at any point you might look at the market and go like, so let's just take screenshot this damn thing. At any point we go down like a little bit, like let's say the S&P 500 goes down like 0.5%. But if all the stupid little option positioning is changing to the point where you might think like, you look at a chart, 0.5%, that's not bad, whatever. I mean, it's kind of bad, but not that bad, okay? That could turn into like the next day, it's like -1, -2, -3, -1, because all of a sudden all the options are flipping over to the other side and everybody's forced to sell. You know what I mean? This is what the fuck? So what he's essentially saying is that be afraid. Be very afraid, because it looks so calm right now that at any given moment, if we hit the wrong price levels on any stock or index, it could start a increase in volatility. And usually volatility going up means like, well, stocks are going down. We've already encountered weirdness where volatility is going up, but the stocks are going up, which happened recently, right? The last move up was that the stocks were moving up while volatility was moving up. Maybe we'll get lucky again and we'll push up to 8,400 on the S&P, right? Maybe that's what's going to happen. But I don't discount the fact that if somebody says something wrong at any moment, Trump, Kevin Warsh, Basent, Bank of Japan, whatever, boom, we just start dropping like a rock for no reason, just because everybody's not positioning themselves right in the options market. That's all I got from this. That's basically what I got. I think that's the layman terms of it. Now I'm going to play something more basic, which I think says the same thing, but in terms that you can understand. Okay, so let's play this one. So you don't need to be an options expert to understand what this guy's saying here.
Well, everybody, I wanted to share an interesting little insight that I came across here today. I was watching the NASDAQ 100 and I realized that these last 7 trading days, we're working on an 8th day right now, but we still have about 30 minutes left to the close, has the closing price lower than the opening print. So what we're seeing basically is the are trying to make progress, right? Even on some, then yet the bears step back in and the price is closing below that opening print. And I've been the board in many individual names where we're getting some nice, those names are faded. And I'm looking at this, I'm like, wow, you know, it's probably pretty rare where we see 7 days in a row, potentially even 8, where we have the closing print below the opening print. So I put this data into Claude, generated a chart, and you can see here, August 26th, currently it's orange right now because we're working on our 8th day. We don't know if it's going to be 7 or 8. The last time this actually occurred was right here in March of 2026. That was 7 closes lower than the opening print. So I went ahead and just generated a quick script to be able to visualize this in Thinkorswim. And you could see over here, if I open this up, you can see the times throughout history where we saw these 7-day streaks. And I came across something kind of interesting that it seems as if pretty much right at around these points in time, you should be expecting some explosive volatility. And why I say that is simply shown on the chart. So for example, you can see here, we're working on our 8th day. It's been a pretty steady, narrow range pullback. Okay. The last time this occurred was actually the exact bottom of this year. And we saw an explosive historic rally to the upside going. And, you know, not to say that this is the same thing going to happen again, but this was an explosive rally up 33% in a very short period of time. We continue on, and I'm just going to find the yellow line here. We'll zoom into the chart. So you got to go back to the pandemic range, 2020. And you can see here, this was coming out of the pandemic. We saw this massive rally, saw some volatility here, and we had a pretty steady pullback to the seven day over here. And then all of a sudden, bam, volatility really opened up. And that might not look like much, but that day looks like, yeah, about 4% decline. And then very quickly from that point, we saw about a 9% rally. So volatility opened up. And not to say volatility, you know, is just downwards price action. It could be volatile moves to the upside and volatile moves to the downside. So you'd have to go back, you know, obviously 6 years. So we keep going back and you can see other occurrences over here. This was 2018. And 2018 ended off with a bang in December before massively seeing, you know, a rally. But you can see this one was selling off pretty significantly leading up to this print. But our 7-day streak was right here. And then we had 3 more days of it. So that was 10 days. So that was this one right here. And then from that point, what did we see? Well, we saw basically, right, at that point, it's like, okay, we'll probably have a higher close. And that was that higher close above the opening print. And then we led to be that happened to be the bottom where it led to a pretty nice rally. If we continue on, you can see there's other periods in time. I think this, yeah, 2017. Very steady pullback over here, kind of similar to what we're seeing right now. But this one led to also, once again, after that 7th day, led to just a monstrous move. And once again, right, I'm not trying to be biased saying that this is what's going to occur. But what I am noticing is typically around this point in time, when you see this occur, you typically get some pretty volatile price action. So here's 2016. You can see this was the 7th day. We had 2 more days of it. So 7, 8, 9, that was right here. You can see it's printed right there. And then that led to, that led to a pretty explosive move to the upside, about 4% rally. And we saw some more volatile price action before obviously heading higher. And that was, the Q4, October, November, December there. And you typically get bullish price action in that last quarter. I can keep going on and you'll just see multiple examples of, explosive moves after that 7th day. So it's not like it's marking a bottom or anything like that, but even here, right, that was the 7th day here. We had another day, so we had an 8th print, and then it started seeing some pretty large range candles, and boom, we saw this explosive move come from that. And this goes back all the way to the great financial crisis that I noticed. And here's I don't know the year in this one. Let's find out what year this is. This is 2014. And you could see these were some pretty wide range candles leading up to that print. And then we saw after the 7th day, we did see some extreme follow through. But man, look at the volatility that came from these candles shortly thereafter it. So, these are huge, huge ranges. that's a 4% range there. And this is, obviously in 2014. So it's even crazier. Right now, we might see that and be okay with it. But man, this is, back when, the Qs were trading at, 88. Over here, this is, what year is this? This is 2013. After a nice rally to the upside, we pulled 1, 2, 3, 4, 5, 6. That was our 7th day. And then all of a sudden, we started to see a nice explosive rally from that point. And once again, you can go back even to the great financial crisis. This is here. This was leading to the financial crisis. We saw somewhat of a steady move here. This 7th day was pretty, wide range bar. But then, man, look at the volatility that came after that point before obviously heading higher, and then that led into the financial crisis. Then it wasn't until almost the bottom we started to see price action get a little bit narrow, but we still saw the bears trying to move to that 7th day, and then we saw this explosive rally. Ultimately, I think we hit another low from that point too, or close to it shortly thereafter. So overall, can you make anything of this? Maybe it's not a tradable statistic, but what it is telling me right now is that if the market starts breaking up into the near future, we're going to get one of those kind of explosive rallies. It'd be something that I would want to be a part of. From this point now, also to note that if we get some sort of a gap lower, it's very possible to see the closing print to be higher than that opening print, given the historical context that it doesn't really occur all too frequently, dating back to 2000, where we get more occurrences in a row of 8, right? There's been 1, 2, 3 occurrences of that.
All right. So from what I gathered here is that this is a rare condition overall. What's interesting to me is that it somehow happens on the 7th day, right? And we look at the DeMark indicators. Every time you hit 7, that's usually the top or the bottom. Otherwise, it'll happen on the 8th or the 9th. Something about that 7, 8, 9 is so important. And DeMark saw that long ago with his eyes. He didn't have the help of Claude AI to be looking for these unique situations. This is a more restrictive conditioning here. It has to be the close has to be lower than the open. So I could adjust that in the DeMark indicators to make it even more restrictive. It can't even count 9s or until it hits all these low conditions. So I can modify it to match that. But now that you have AI, you could experiment with all kinds of ideas that you couldn't before. All right, so that's what kind of saying you can't not take advantage of what AI can do, because you can explore different theories like this one. So I found that interesting. Why is it the 7th that's so important here, the 7th candle? Because we already know in DeMark, the 7 count, the 7, 8, 9, when you mark a bottom or a top at the 7th, 8th, that one. So I'm going to put up this image for you. Put up this image. I put it up last night. So I'll put it up again. So because I put the video with it. As you know, QQQ has just had 8 straight days of closing. So this was yesterday. Or 2 days ago, I forget, of closing below the open. This must be super bearish, right? Sell everything and move to a cave. Nope. So the last time these things happened, the market moved a lot higher. So 1 month later, 3%. 3 months later, 8%. 6 months later, 21%. 1 year later, 30% for NASDAQ. So I wonder what's up. All we know is that volatility will increase. We don't know the direction. Maybe it's both directions. It could go up and then down, or we go down and then up, right? This is the same problem we had going into the end of March. The same problem going to the end of March. It was the same thing. We are about to hit something intense that's about to pop. So you ask me, like, am I still bullish on LUNR? Yeah, maybe. If the things go the right direction, if we go up first before we go down, definitely. If we go down before we go up, no good. But I'm hoping that we just fly up somehow for some reason into mid September, or at the very least next week we could get it all done in 1 week. That would be great. And then I'm out. I'm completely out. Now I'm just going to be chilling and wondering what's up, what's next. When should we just do oil and gas again? We go lithium, uranium, all that stuff. But right now, next week is it. So I got a question about Ripple. So last night I said $2, right? $2 is the target with the DeMark indicators. It looked like it could happen, but right now it doesn't look like it's gonna happen. We're gonna have to wait for the options to expire for a lot of these cryptos tonight, because they run on UK time, all right, GMT, Greenwich Mean, UTC time. So they'll expire pretty shortly, I think, in a few hours. And then after that, we got Kevin Warsh in the morning, 10 a.m. My bad, 10 a.m. in the morning. Kevin Warsh will open his mouth again. We'll also have University of Michigan data. I think there's some other data, payroll revisions that have to be done. So that might affect stuff in the market. I don't know. Look at the bond market, see what happens. As far as gold and silver, yes, it'll depend on what Kevin Warsh says. We already got as high as we possibly could. And if you want to go any higher on gold miners, silver miners, we're going to need Kevin Warsh to speak. But that's all I want to say about this thing here. Okay, what else? Got I think I want to cover the earnings a little bit, software earnings. So let's get rid of everything. Let's just try to get as much done as possible right now in the 30 minutes, and then maybe I'll play some more videos for something else. Okay, this stock here, Rubrik. I think this is a cybersecurity stock. It already had earnings. It's down 6.78% overnight right now on the overnight market. However, it was already up 11% thanks to CrowdStrike earnings the day previously. Sentinel-1, same thing. It was up 10.73 because it's just following the other CrowdStrike and other software companies up. But we see we already have hit certain levels. Rubrik already hit certain levels. This thing already hit certain levels. We are teasing the tops here. I don't believe we can just keep on going. That's why I'm seeing a lot of this in a lot of the stocks. In the software, it's like, nah. Are we gonna keep flying higher? No. Okay, Okta, we already know has been in a range. I said this thing looks good. I definitely said this thing looks very promising. We're already breaking out. I see it. But are we going to continue flying into 300? No, I think we got to pull back a bit. I don't think it can fly off on, well, I don't know. Maybe it can. Maybe I'm wrong. Maybe the whole NASDAQ will just push this thing higher. We've seen this in a lot of other cybersecurity stocks like this one, right? CrowdStrike. Once it broke out of this level, 133, few months ago, it just kept flying higher, getting way more volatile, and that's when I started going like, yeah, I'm out of here. I'm not gonna play it. But CrowdStrike up 20%, back to the previous high it made in August. This is way too volatile for me. I'm not sticking around for this one. CRM, all right. So this one was kind of one of the weaker software companies. E59 was a top back 2024, fell all the way down to 144, and it made this lower low here. Finally, it's trying to get back in this area. Okay, good, very promising. But if we look at the weekly, let's see what the weekly gives us. The weekly chart here. Let's see this, good, perfect. Very nice, good. It's doing everything correctly. As I can see. So I think a lot of like, let's look at Adobe and Intuit. Let's see how they go in the next weeks. You know, Adobe will have its earnings. If they start doing stuff like this, then I'm going to get more and more bullish on software. I think, yeah, like I said some months ago, I was waiting for the time when software would finally take over from semiconductors. I think the Korean stuff kept semiconductors going a lot stronger than it should have for longer. You know, it should have went back to software at one point, but people were so enamored by semiconductors. I guess they just didn't want to put their money here, but I think they're putting their money here. They're definitely putting their money here. If I looked at like SOXX divided by XSW, so put too many X's here. Triple X, no, not triple X. Come on. Okay, so let's see. Semiconductors versus software. Semiconductors versus software. Software is now winning. It clearly looks like it's winning right now. If I do the inverse, right, maybe it's more clear, right? This is a big change. This is definitely a big change. I don't think we've seen it, the ratio between software and semiconductors change this hard. This is another reason why I never wanted to get back into software after the tariff stuff. So the tariff stuff, I bought a ton of that software leverage ETF. I bought a bunch of like stupid little AI stuff. I did buy some software stuff, but by the time we got to September, you know, late summer going into early fall, you could see, if you look at this ratio, why would software stock really start collapsing till maybe October, November, and December of last year. You started seeing a lot of them fall back. Let's see, CR back when? I'm guessing November, right? October, November. Actually, it kind of tried to hold on here. But you see it went sideways. Terrible, right? If you bought the tariff bottom of CRM, like it only went as far as 290 from 228 before just melting down. While if you played like anything else, it would have been good. Like Palantir did better than this. What the heck? Yeah, this is horrifically bad. Yeah, Palantir did way better than this, right? We finally got up to like close to 200 up here by August. At that point, we started going sideways. Now let's see. Adobe was the one that probably maybe October, right? Really fell through. Oh, this one waited until like New Year's too, pretty much. But you could see like a lot of software was like this. Terrible performance. Let's see what else. CrowdStrike. Let's see what the cybersecurity ones did. How did those do? Okay, if I bought the tariff bottom here, went up into June, sideways, and then probably November. Yeah, November started going down. Okay. So yeah, it's a mixed bag. I think for the most part, probably like October, November, most of these companies started like really weakening. But it looks like CRM and Adobe were already weak to start off with. If you bought the tariff bottom of those type of stocks and it only went up to May and then just went sideways after that and started pulling down into July, wow, that's horrible, right? You picked losers. You really picked losers. I think it was very hard to pick losers if you bought the tariff bottom. So not many losers out there. So software was the something something that I couldn't believe. It's like, dude, semiconductors. It's just semiconductors keep going up. Yeah, semiconductors is this. Up, 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 up. And then this year, explosive up. Right? So yeah, I don't know what to say. So if we look at that ratio, this is a big change. If we look at this ratio, this tells me a lot. This tells me like, wait a minute. This is a big change in character. We made a relative top up here, December 24th. I mean, December 2024, I mean. And since April last year, since the tariffs, it just went down, 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 down. We tried to make a recovery during the Iran war, apparently, because it's like semiconductors was more sensitive to the energy problems, right? So software was sort of beating it for 2 weeks. And then after people came to their senses, they're like, AI is more important anyway. So AI is going to kill software anyhow. So I guess that's what the narrative. They always keep coming up with a narrative. I don't even know if the narrative made these moves or it's because like the stock market moved that way and the news tried to make a reason for why software did what it did and semiconductors did what it did. But we could see the bottom down here. June was that bottom. So yes, I think next year is the year software. It's not going to be semiconductors. Only a few semiconductors will do well, I think, right? It's not everybody. That's what this means. It doesn't mean like, oh, sell all your semiconductors. No, that's not what I'm saying. What I'm saying is that like before you could pick any loser semiconductor and probably move up because like the whole ETF is moving up. You could leverage it too. So there was like, it was free money essentially is what I'm saying. So you could buy like SOXL. That's what I did in April. I don't know why, in the back of my mind, I said like, that's probably the best one to buy at this low. That was like the only leverage ETF I really bought down here. I didn't even bother with a QQQ leverage. I just said like, I think semiconductors is overdue because it had a terrible fall from the yen carry trade. And this was so cheap that I said, I think semiconductors are too cheap right here. So I just went leverage automatically. So I think that was a good gamble. It paid off. Stuck with it for this year, I guess. What the hell is this? What is this? What is this extra move? I don't know what's up with this. This is crazy. That makes no damn sense. Thanks, Korea. This is Korea. This is thanks to Korea, most likely. So if you think you could just ride this thing up into next year, I don't think it's going to be that easy. That simple. You're going to have to pick and choose this time. You're going to have to pick which stocks in the semiconductors are going to be the winners. Not everybody is, right? Is it Marvell? It's definitely, I mean, you look at NVIDIA. NVIDIA's already lost its luster. It's lost its luster for a while. AMD might be the one that people will just run into now because they're getting sick and tired of this NVIDIA sideways stuff. I mean, yes, it's up 9%, but I don't think it's gonna move like it did COVID, right? Or even pre-COVID. Pre-COVID was very good too. But I think post-COVID 2020, really good, right? It's really good. So I don't think it's going to repeat that. People are going to look for somewhere else. They're going to look for Intel. Intel is probably going to do that kind of move. Intel. So that's probably why Nancy Pelosi keeps on loading up Intel at whatever price she can at this moment, because probably Intel is going to be the winner semiconductor stock to stay in. But everything else, some of them will be up, some of them will be down. And that means the ETF won't go in a straight line. When the ETF doesn't go in a straight line, I'm not going to leverage it, right? I'd rather leverage all these software companies then. If I think that all the because like you can notice now with the earnings, a couple software companies go up 20%. The other two follow with 11%, even before its earnings. So you see Rubrik here and Sentinel-1 followed CrowdStrike. just because it went up 20%. And I bet like having Salesforce, CRM, and Okta go up 28% for Okta and CRM, 22%. That also juiced it, right? So there you are. I think software will have the same type of motion that semiconductors had for the past couple years right now. So that's where I'm going to be sticking around. So I won't be talking too much about semiconductors anymore, I think. We're going to go into like oil, gas, and energy to replace that. Yeah, utility stocks even, right? Some utility stocks for sure. All right. Let's see. What other things? So I'm going to play some of these etc. videos. Etc. Etc. I got a lot of these etc. videos. Okay, a lot of these Wyckoff analytic videos, little clips here. Okay, which ones to look for? Which ones would be good? Okay, I have a bunch of them. Damn. Oh man, I had a whole bunch of them to get through. Okay. Oh, wait a minute. Ulta. I forgot. I gotta look at Ulta. How did Ulta do? Oh man, Ulta just went down 3%. So I don't know. Ulta's Hormel Foods. So Hormel chili, this one down. So no good. Yeah, I was looking at this loser stock. I was thinking like, eventually this thing will have to catch a bottom, right? Like Nike. No, it doesn't look like it. Okay, Burlington Coat Factory. How about this one? No, not good. That candle looks ugly. Can't do that one. Dollar Tree and Dollar General. Dollar Tree looks okay. It looks like it was down lower in the morning. All right, that's fine. So that's why I'm guessing where this bottom of the weekly candle. This is a weekly candle, but it touched that, so that might be bullish actually. How about Dollar General? Dollar General, no, not sure. Bilibili. So this is a YouTube competitor from China. They want to get into English language content. They want to start competing. They are offering 70 cents to any creator that has 1,000 view videos. So if you have videos on there with 1,000 views, they'll pay you 70 cents. So that's one we're going to be looking at. Bilibili, maybe this is a bottom. So some of these Chinese stocks look more attractive at these levels. Okay, Pinduoduo, XPEV. Nah, I don't care about that. Kohl's. Let's see, another retailer. No, I don't know. Maybe not. Let's see, anything else? SGML. We were talking about that, like lithium. Okay, nothing new there. BIS, nothing new there. Can't say nothing there. BitDeer. Okay, BitDeer. Same thing with DJT. Okay, I might as well discuss that then. DJT, Donald Trump. Okay, looks like a bottom here. So I might be interested in DJT. Right now it's up 2.84%. And then the other one was American Bitcoin Company. So that's Trump Jr. or Eric Trump's little venture with Hut. So Hut divested its little Bitcoin operation and put it into this subsidiary company for the Trumps. So they take over the Bitcoin stuff. So that one, like I said, maybe it goes to the top of this range, it'll pull back, and that's when you buy, and then it'll start going up higher for the rest of the crypto run. So the crypto run probably starting mostly in November, December, somewhere that time, and then accelerating once we get to the new year. Okay. How about Workday? Belt. Affirm up 11%. Okay, Affirm up 11%. Workday flat, so nothing new there. Okay, so buy now, pay later might be good. So I've been waiting. This stock has been doing nothing since 2024 when I was talking about it on the old John Galt show. Went here to 23, it bounced up to 67, then I stopped looking at it. Okay, made a low at 50. Yeah. Okay, so there's gonna be some stocks that are like this that I put into a list on the stock charts. I'll have to go over them then. If a firm is up 11%, then I'll have to pay attention more and more because it looks like this is about to break out. This whole area here, probably I would consider as a range, and 77 finally it'll go up to 180 or higher. Okay, I think that will be good. That'll be something good. I think now with the economy, with the inflation that's stuck in the economy, people are just going to get loans for everything. They're going to buy now, pay later for ramen noodles, as far as I'm concerned. All right, Autodesk. That's a software company. Okay. Okay, I think there's going to be a lot of software companies that have this ugly looking chart where it's just like nasty and then it goes back up. Perfect. Perfect. This is the stuff we want to look for. This is the stuff we want to look for. And we can see like we made low in 2022. This thing retested that low right here in June. So once we climb up, maybe this whole huge thing is a range that Autodesk can finally fly above 320 or something. I think all these software companies, they have to incorporate AI. They have to improve their operations. That's what people are looking for. They know it's like AI is going to compete with a lot of these software companies. The best thing the software companies can do is like offer something for other people utilizing AI to reduce their costs. That's about it. So if they can internalize and use AI to help them instead of being a competition for them, just like people got scared of the cybersecurity companies, right? They thought the AI would take them over, but it turns out that AI is creating more cybersecurity threats than they could keep up with. So they still need these cybersecurity companies to fight the AI threats now. So there you go. You know, it's not clear which software company will benefit and come out okay. Right? Man, narratives change fast. Narratives really change fast right now. All right, I'm done with that. Let's go. Let's play some last minute videos here, and then we can end it. About 10 more minutes, right? All right, I got some time. Let's go. Got some time. Lunar eclipse is done with. We survived the full moon and lunar eclipse. Now we're going to see what we got here. So I'm going to play some of these little, let's see, commodities. Okay, got that one. I got this. Okay. All right, let's play this one.
As this whole economic story unfolds that we've just talked about, you have private equity coming in and taking this company private right when you could really see some big increases in employment going forward for the next year or two. Probably really good timing. And I've done case studies on these kinds of situations before, where as soon as they get out of their accumulation structures is when they oftentimes are taken private. And we saw this in Whole Foods. And I wrote a blog on that, on Whole Foods.
Yeah, I remember that. You had a trade in Whole Foods, and Bruce did this in real time, right in front of our eyes here in WMD.
All right, I just wanted to show like these charts here. So I think this is Workday, which we covered. And then like the other companies kind of related to that, ADP. So if you ever go to work, I'm thinking your checks come and your payroll gets handled by ADP. And there's also another company similar to that, PayX. So those three seem to make these little bottom moves here and moving up. So a lot of software plus services like that. All right, so we got those three. That's all I wanted to point out for that one. So you can take a screenshot of that, but you can see like the Wyckoff guys, they do that range bottom type thing. And you can find a lot of software companies, I'm sure, at this point where they have a similar look with the range.
Bruce, the first one is the treasury yield. So what are we seeing there? Are we going higher?
This was a chart that we had put up a number of weeks ago, and see what's the date on this, May 26th. And then the chart, both of these are up to date, as you can see, because I've done my Frankenstein chart on the bottom for the point and figure, and then up top it's as of August 18th, as of yesterday. Anyway, and this is end of day data. So what was so interesting today was that the Treasury announced a big bond buyback program that they've implemented. And of course, there's all kinds of reasons stated for that. And I find it most interesting on a number of different levels. And I just wanted to put up this chart again because look where it happened. The yield on the 30-year note, or 30-year bond, I think is actually what it is, has gone up and really broken that 510 yield area. And this, I believe, is a 25-year high, this breakout of the 30-year bond yield and going back. And so it's a very big deal.
All right, so you can take a screenshot of that here. Okay, that's your point and figures right there for
and
the
so
2-year. Hold on, let me get that. Okay, there, you can take a screenshot of that. All right, now I'm gonna play something else. Okay, let's see what else we got. Let's see, go back to payrolls. All right, let's see what this one is about.
These are payroll services and employment services for corporations. And you can see we put these up before and said, look, these look like they're nearly completed causal structures. You can see the beauty of the downtrending channels, the throw unders, the climactic behavior. We talked all about that, so I won't get into it. You can see the accumulation structures of the point and figure. These are all one box reversal swing trading structures. I'll let you all count them, but you can see quite clearly that there's cause built there. We just wanted to hearken back to this. I think the date was the beginning of June for when we put these up, but then we brought these pretty much up to date. So you can see the payroll companies were going down in an economy that was weak, not creating employment in the private sector. And all of a sudden, the economy starts to show real signs. There's been really great private industry job creation. And these are good jobs that pay well, industrial type jobs in many cases. And with that, you can see that these stocks were very inexpensive as they came down and they started to find good support.
All right, so that goes on with the video I played earlier. So you can take a screenshot of this. Now, I think what he mentioned that like these payroll services companies are improving probably means like it's good economy because there's more employment. Okay, well, if that's the case, then of course the bond market would go to higher rates, right? It's not just because of inflation, it's also because the growth is good. You don't want to have inflation and the economy go down. That's stagflation. Having inflation with good growth in the economy is not, ideal, but it's tolerable. Well, if you had the case where we had high inflation and no growth or low growth, then that would be a problem. So I'm kind of thinking, people shouldn't be too nervous about having high bond rates for now. I think we'll tolerate it for now. Of course, with the Strait of Hormuz and all that whole like energy stuff, of course, eventually that will hurt things. But for a year, maybe that's fine. Stock market can go up for a year at least. Then that's where you'll make your money, right? So always about the timing. Always about the timing. When does it turn? When does it turn? Right now, I don't think so. So probably sometime late next year, we'll revisit the issue and go like, all right, is the top in yet? That's when we'll worry. Okay, next video. Gold. Next video will be about gold. All right, let's play this one. Let's see, gold. All right, gold and copper.
Sideways out of the channel around 5,200, and it attempts to hold there. When it gets out of the channel on the below the demand line, look at the response. Look at the decline from 5,150 all the way down to 4,100 without as much as a 1 3-box reversal. So that's epic. And so that becomes support. We went down to 39.50, slightly below that level, undercutting it, built a cause. And so you can see that when we just take a 7-column cause there at 50 points, 3-box reversal, it takes us up to 5,000. Now, I only counted from the low because the count line is effectively the next box up. But arguably, if you took maybe like the midpoint, maybe it's 5,150. 5,200, something like that. But that's not important to us. The important thing is it really signaled the potential for a cause to turn it into a markup. And we seem to be getting that.
All right. Well, I'm gonna let you try to take a screenshot of this. Okay, take a screenshot. Now, the right portion here is copper. You can see the target he drew went up to about $11.50 to $13.75 dollars a pound. I think copper is by the pound. Okay, gold and silver troy ounce. Copper is by pound. So yes, very high for copper. And copper going up is also bullish for the economy. So if you have a high demand for copper, that means you're building stuff. So there you are. I think we're okay. I think the world economy isn't getting damaged by the high oil prices for now. I'm saying for now, or the natural gas prices in Europe that's really high. Natural gas prices in the US is not high. We have our own natural gas. That's why if you're bullish on United States natural gas, you're going to have to wait a while. A lot of people were chasing that. They thought like, oh my God, the Strait of Hormuz being shut down. That's great for natural gas. Well, natural gas is not like oil in that sense, because we did not build a lot of export terminals during the Biden era, right? If Trump kept going on being president, you probably would have seen more export terminals and contracts made for natural gas between us and Europe instead of Qatar and Europe, because Qatar was being contracted out to replace Russia as the main source of European natural gas. So France and Germany, I think, made a lot of contracts and deals. Of course, they also have like Norway. Norway can also generate some. Scotland. So depending if the UK allows Scotland to drill, things are up in the air. But you know that Europe is very anti fossil fuel in general. So a lot of those reasons are why United States natural gas, not as bullish as you thought it could be. If you were in, yes, natural gas is very high. The price in the Dutch natural gas terminals are very high over there, the Dutch futures for natural gas. All right, that's it for that. Let me see if I have any other videos for you. I'm pretty sure I do. These short little clips I want to get through here. Let's see. Long-term uptrend, media breadth analysis. Okay, let's see what this one's about.
That green arrow there just shows that the...
Okay, we went over like the greater than 50 on the SMH. Remember that when I started this video? This one uses the point and figure bullish percent to give the breadth. So this is the breadth, okay? This is the breadth that you can use to find bottoms.
Bullish percent, which goes down to around 30%, is starting to trend up before the low in the NASDAQ. It's about a 2 or 3 day advance warning, but that's a very valuable warning about improvement. Cool part, Ramon, is that there's bullish percent on all the sectors. And there's bullish percents in other places that aren't technically sectors, like the gold miners. They have bullish percent on the gold miners. So there's a number of really good bullish percent studies that can be studied for those that have interest, say, in healthcare or technology or gold mining, whatever it might be.
Okay, I'm gonna let you screenshot this one too. Keep that for your reference. So, yep, you can use this to find bottoms. Pretty good at doing that. All right, guys, I'll see you around. Good night. Remember, 10 a.m. Eastern. Kevin Warsh will start babbling. University of Michigan survey, payroll revisions, blah, 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 whatever. See what happens there. But watch Marvell tomorrow and the semiconductors. See what happens. Also, how it moves, right? When it opens, the market opens. So the market will open. You got 30 minutes, and then Kevin Warsh will start speaking. So watch that 30 minutes carefully if you need to pay attention to anything. So look at the Marvell, look at the semiconductors, and also look at the software. Look at if software like gets sold off, right? We're at the end of the month pretty much. There's only one more trading day in August, Monday. So after that, we're in the final stretches of the quarter. It's going to get very quick towards the options expiration and the next Bank of Japan and Federal Reserve decisions in I think it's both of them are going to be around mid to late September, sometime there. So we're not going to have many trading days there. Labor Day is when things kick off usually. That's when I usually see trouble happen. A lot of times trouble happens July, like first week of July, and then the first week of September. That's when I start seeing trouble. It starts creeping up. So pay attention. Pay attention to next week. That's probably the end of it, though. If we can't make it through next week, then I'm going to call everything off and say, okay, forget about it. We're just going to crash and burn now. We're just going to crash and burn because we have to move. Something has to push us up. I don't trust Oracle. I'm not going to trust Oracle. I'm not going to trust any of those guys to help us. The CDS, the credit default swaps for Oracle have reached the high of 2008, I've heard. I've also heard that another stock has CDS values that have gone up that high too. There was some tweets about that. So there is some danger lurking that might scare people. If earnings turn out bad for Oracle, that could be enough. It happened before. Oracle's earnings did screw the NASDAQ up late last year in November, right? It was like sometime in October, mid-October, November, something like that. It screwed it up for a while after Nvidia. So all right, I'll see you around. Good night or good morning. Well, to you guys in the East Coast and Central Time, good morning.